U.S. stocks closed lower following mixed corporate earnings. Yields tumble as fresh data signals contraction in the economy. Asian markets too trade largely lower, while the SGX Nifty indicates a flat start for the Indian market. And oil prices are near a 3-week low as demand concerns intensify, weighed down by recession fears. Brent now trades around $80 per barrel. And RBI may have held rates at its last meeting, but the members of the Monetary Policy Committee are unanimous in raising concerns over rising prices, say the war on inflation is far from over. The minutes of the April meeting show RBI Governor reiterating that there is no pivot in the policy, only a pause. An IT major HCL Tech reports a steady quarter with earnings in line with estimates. There are no negative surprises, and the management delivers better than expected revenue growth guidance, says its deal pipeline is near an all-time high. Reliance Industries is all set to report its fourth quarter numbers later today. A CNBC-TV18 poll shows most businesses are likely to deliver decent growth. Jio, meanwhile, is expected to report a modest increase in revenue. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are all of the top headlines that we have for you on this Friday and the last trading day of the week. So there's lots for us to get to. There's been a raft of data that we got from the US as well. So we'll talk about all of that. But for starters, you're definitely seeing the markets not doing so well across the globe. The handover was quite mixed, but most of Asia is in the red right now. Actually, all markets, barring just the Taiwanese index, now trading in the red. There has been a slip that has come through in the past few minutes as well. And what's clearly doing the worst this morning is perhaps the Hong Kong market and the Kospi, both of them seeing cuts right now. So Hang Seng over 100 points in the red. Taiwan, like I pointed out, is holding up in the green. It's around 0.3% higher there. But if you look at any of the other markets, so whether it's a Kospi, that one is down around 0.5%. You have Straits Shanghai seeing some minor losses as well. The Nikkei markets absolutely flat, but there is around that 10-point cut that you're seeing. So a little bit of a negative start across Asia for sure. Let's also bring the SGX Nifty up for you. That is indicating a good start, mildly positive actually for our own markets, better than what's happening in Asia at least. So it's around 20 points higher there on the SGX Nifty. That's what we're tracking in terms of the action from Asia. But let's also get you all of the action from Wall Street now. We saw the US markets end the trading session lower. So the Dow Jones fell around 110 points. We had the S&P 500, which dropped 0.6%, and the tech-heavy Nasdaq index was weighed down by Tesla, which actually tumbled around 10%. So that was where the big hit really came through. This after the company posted lackluster earnings. Revenue came in at $23.33 billion. This is versus the expectations that the street had of $23.21 billion. The net income, on the other hand, fell around 24%. So that came in at $2.51 billion. So that was really Tesla's earnings weighing on what we saw with the Nasdaq. Meanwhile, some important comments as well. We had Cleveland Fed President Loretta Mester, who stated that inflation still remains way too high, and she sees fund rates moving above 5%. Now, remember, Mr. is a non-voting member, and she also said that the Fed is closer to the end of the tightening journey than the beginning. So those are some important comments that came through from the U.S. But sticking with the U.S. markets, let's also bring you some important commentary coming in from Global Chief Economist at Citi. This is a word from Nathan Sheets. Listen in.
We see a little bit, yes, the economy's slowing, but we see a little bit more durability in the economy, in the labor market, and inflation. And as a result of that, we have the Fed hiking rates to around 5.5%. So we're a little bit higher than the Fed's dots, and we see that as what will ultimately be necessary to bring down inflation, and that is kind of the dynamic that unfortunately also brings on a recession toward the end of this year and into early next year.
All right, that is the word coming in from Nathan Sheets. But here's some more. Treasury Secretary Janet Yellen calls for constructive and fair economic relationship with China. She also said that the U.S. decoupling from China could be disastrous. So let's listen in to those comments.
Progress on these issues requires constructive engagement between the world's two largest economies. Yet our relationship is clearly at a tense moment. Our economic approach to China has three principal objectives. First, we will secure our national security interests and those of our allies and partners, and we will protect human rights. We will clearly communicate to the PRC our concerns about its behavior, and we will not hesitate to defend our vital interests.
All right, that is the word coming in from U.S. Treasury Secretary Janet Yellen. But that's everything that we're looking at globally this morning. Let's talk about all of the cues that you should track before we get into this trading session. We have our research team here with the trade setup. Nigel, Ekta and Vivek are all here to prep you up for this trading session. Guys, a very good morning to all of you. And Ekta, let me come across to you first. We were just going through the global picture right now. For our own markets, it was an absolutely flat close. But take us through everything we should watch.
Thanks for that. Well, the one thing that stood out in yesterday's trading session is that the markets did snap their three-day losing streak. FIIs were sellers for the fourth consecutive day. So, for example, Monday, the FIIs net sold over 500 odd crores. They topped it up with Tuesday at over 800 crores in terms of a sell figure. Wednesday, they sold around 13 odd crores. And yesterday, they net sold around 1169 crores, which was the largest that we've seen this entire week. DII's net bought over 800 odd crores. Now, what could stand out in today's trading session could be the IT stocks, considering the negative sentiment post TCS, especially Infosys numbers. Now, remember that Mastech gained yesterday on the back of their Q4 numbers. HCL Tech was largely in line with estimates. Cyient reported a strong set as well with FY24 guidance in line. So maybe on the fringe that would bode well for the IT sector in today's trading session, especially for stocks that still haven't reported numbers. Now, in terms of the global setup, the US markets have fallen on concerns about profits in this earnings season. So there was a disappointment from the likes of AT&T as well as American Express yesterday. Jobless claims have come in at around 2.45 thousand versus an expectation versus 2.4 lakh on a week-on-week basis. Asia largely in the red. Crude oil prices have declined. In fact, it is the lowest in about 3 weeks. So that's definitely a positive for us. SGX is indicating that maybe it could be a positive start. Also, watch out for the bank Nifty as well as the broader markets outperforming. On a month-to-date basis, the mid-cap index is up around 4%. The Nifty Bank is up around 4%. Result reactions, we have ICICI Pru, Sterling and Wilson. And in terms of results today, the big boy Reliance Industries, which the street will be watching out for, Hindustan Zinc as well, and ICICI Bank tomorrow. So we will have Monday, which will be important in terms of a lot of result cues.
Oh, absolutely. It's going to be a heavy Monday for all of us after all, this entire slew of earnings comes through. Ekta, thanks for that. But let's talk about the stocks that could be in focus in today's trading session as well. Vivek has that entire list. Vivek, like Ekta was pointing out as well, it is likely once again to be a lot about the tech names.
Absolutely right. Good morning. Quite a lot of results that came in post-market hours yesterday. First on our list is HCL Tech. Now, unlike its larger peers, HCL Tech has not had any negative surprises, which is actually being seen as quite positive in this environment. On a sequential basis, dollar revenues down almost 0.3%, EBIT margin coming in at 18.2%, and profitability was down 2.7%, largely in line with the anticipated expectations. Now, FY24 guidance is on the higher side, and this is something that the street is taking quite positively. Consolidated revenue seen higher by close to 6 to 8% for FY24. Now, coming on to Cyient, it's been a very good set of numbers from the company this time around. Dollar revenues up almost 8.1%, EBIT margin coming in at 14.2%, and profitability up almost 4.6%. FY24 guidance is largely in line with what the street was anticipating. CC revenue growth seen at 15 to 20%. Coming to ICICI Prudential Life, it's been a very good set of numbers, with the company managing to achieve its stated targets of doubling its VNB revenue, and FY19 VNB revenue doubling was what the company had earlier guided to. Coming to Sterling and Wilson Renewable Energy, slightly muted set of numbers from the company this time around. A bottom line loss of close to 417 crore. However, the order book is quite strong. Unexecuted EPC order book had close to 4,913 crore. Lastly, watch out for both Siemens as well as RVNL. The consortium of both of these companies has received a couple of orders from the Gujarat Mail Retro. The back of that expect some green on these stocks here as well.
All right, that is a long list of stocks. Vivek, thanks a lot for that. And of course, our Reliance will fare ahead of its results, right? We're all watching that as well. But with that, Nigel, it's over to you. Take us through everything that you're tracking from the futures and options space.
Well, morning, Pavitra. Yesterday was a quiet session as ever, right? And even in the F&O market, if you look at the Nifty open interest, well, it didn't add too much. The premium on the Nifty, well, it's holding at around that 30 points odd. And the Nifty Bank, well, that did send some bit of buying out there. So let's see how that goes, because ICICI Bank is going to be the crucial factor. Remember, it comes out with a set of numbers tomorrow, and that has the ability to move the Nifty Bank around. The FIs in the F&O market, well, they added some long positions and they covered some mild shots. And their positioning now is at around 38% long positioning, which is more or less constant in that vicinity of around 35 to around 38% is what we have seen in the last few sessions. Moving to the options data, remember yesterday you had the weekly expiry that did play out, and it was as boring as ever, because in the final hour of trade as well, you didn't really get that 3 p.m. move. We were in that range of around 30 points or thereabouts. But then it appears there's a short straddle at play. What's that? You write the 17,700 call, 17,700 put, and you pocket a premium of both of them. So you add both of them, on an average, you would be getting close to around 200 rupees or thereabouts. So that appears to be the strategy that's playing out. Let's just get a little bit deeper into the short straddle. It appears the call writers, they have more confidence. The total open interest, so there is close to around a crore shares odd. 17,700 put as well, that has a fair bit of open interest, but appears confidence is a little bit lower on that side. So bringing you to the range then, if you're looking at the short straddle, you're making close to around 200 rupees, you're pocketing that, 17,700, you add 200 rupees and you deduct 200 rupees from there. So you get the broad range of around 17,500 to around that 17,900 odd mark. The SGX Nifty though is indicating a bit of a green start. That's the broad range we're looking at. For the day, you should get the range up for you on the screen, 17,550 on the downside. Risk reward has favored you if you buy around there. And on the upside, around 17,700, that's where we're seeing some resistance. So let's see whether or not we can get past that. Back to you.
All right, let's see whether we can get past that or not. Nigel, thanks a lot for taking us through all of those cues. But with that, it is time for our first short break on the show. When we come back, it is all about earnings. We're going to bring you the highlights of HCL Tech's fourth quarter earnings and also tell you what to expect from big boy Reliance Industries today. Stay tuned. Welcome back. You're still tuned into Power Breakfast, and the big earnings that came through yesterday were from IT major HCL Tech. So Rima is here to wrap that up for us and tell us how this quarter is really looking. Rima, largely in line?
Thanks so much for that. So it's a largely inline set of HCL technology, but in such a macro environment, uncertain environment, no negative news is actually good news and is a positive surprise. So HCL Tech's top line has fallen by 1.2% in constant currency terms quarter on quarter, in line with expectations. EBIT margins are down 140 basis points to 18.2%, slightly worse than what the street was anticipating. But the other metrics in Q4 are looking up. Deal wins are at more than $2 billion. The company continues to add to its headcount. Attrition has moderated on a sequential basis, stands at 19.5%, and the deal pipeline is at the highest ever level. For FY24, the company has guided for a 6 to 8% top-line revenue growth. This is at the upper end of street expectations. The street expectations varied from 4% at the lower end to 8% at the upper end. So the FY24 guidance is not so bad. Margin guidance is at 18 to 19%, largely in line with street expectations, and it compares with an 18.2% margins that the company delivered in FY23.
All right, Rima, thanks a lot for bringing us the fine print of HCL Tech's earnings. But let's also listen into what C. Vijay Kumar, the MD and CEO of HCL Tech, had to say on their earnings and their outlook from here as well.
Our ramp-ups have happened on time, and we've transitioned some large clients. We've also had some good programs in our financial services clients around cloud adoption and modernization. If I just break financial services into banking, capital markets, and insurance, I think both capital markets and insurance is where we had the maximum growth. Telecom, as I called out even last quarter, we see cut in discretionary spend to be a little sharp. That's why you'll see a 5% plus decline. We're cautiously optimistic of what would further span out in these two segments.
All right, that is the word from the HCL Tech management. In fact, we will also be bringing you a full conversation with the management at 9 a.m. today. You don't want to miss that, so stay tuned and catch it on Bazaar today. But sticking with earnings, we also have big boy Reliance Industries, which is all set to report Q4 numbers today. So we have Sonia standing by the big wall to take us through all of the expectations from Reliance this time around. Sonia.
Well, it's a big day. Reliance Industries is all set to announce its Q4 earnings. Remember, the stock is down 7% in 2023 so far, but it's a decent quarter expected this time around. First, let me take you through all the key numbers that you can watch out for. On the revenue front, it's about an 8.5% growth that we're looking at compared to last quarter. While on the EBIT, the EBITDA could see a growth of around 5.2%. Margins could be a tad bit under pressure compared to what Reliance did last quarter. But on the profitability front, it's a 12% growth that we're looking at somewhere around 17,700 crores. Now, as I said, both the consumer as well as the commodity businesses for Reliance Industries have done decently well this time around. First, let's take a look at the oil to chemicals business, which is the key reason for the recovery this quarter. There's a sequential recovery that we're expecting for a couple of reasons. A stronger base gross refining margins and lower windfall tax is something that can aid this segment for them. In fact, looking at the gross refining margins, Singapore gross refining margins improved to $8.2 a barrel in Q4 compared to $6.3 a barrel last quarter. There's also a demand improvement seen because of the China reopening, and that has aided the numbers this time around. In the consumer-facing businesses, Reliance Jio has slowed down a tad bit, so we are seeing the revenue and the profitability growth moderate for them. In fact, it could be the lowest in the last 7 quarters. On the average revenue per user as well, it could be absolutely flat this time around at 178 rupees. A couple of reasons for the slowdown, but primary reason is that there's been an absence of a tariff hike, and that has caused Reliance to see a slowdown in its growth rate in the telecom business. Let's move to retail now. Retail growth is expected to be about 6% on a sequential basis, coming in at a little over 46,650 crores. These are the recommendations put out from Nomura. And on the EBIT side, we're expecting about 3,800 crores versus 3,600 crores last quarter on a sequential basis. So clearly, as you've seen, there's a decent growth expected. Some of the businesses like Rel Jio could see a bit of a slowdown, but it could be offset by good growth in the oil to chemical space.
All right, Sonia, thanks a lot for getting us all of those expectations. Standard Reliance disclaimer on your screen. It owns and operates the channel that you're currently watching. But that is everything that we're watching in terms of earnings. Let's move on from that and bring you a quick roundup of the minutes from the RBI's April policy meeting. The minutes released yesterday suggest that members of the Monetary Policy Committee do not favor a rate hike in the coming months. They signal an extended pause even as the central bank has ruled out a pivot anytime soon. So reiterating RBI Governor Shaktikanta Das's comments to the media after the meeting earlier this month, where the Reserve Bank decided to hold rates, the RBI Governor maintains that this is a tactical pause and it is not a pivot or a change in policy direction. In fact, the Governor also said that while inflation for this financial year, that's for FY24, is projected to soften, the disinflation towards the target is likely to be slow and protracted. So those are some important comments that came through from the RBI Governor. That's everything that we're tracking from the minutes. But with that, it is time for a short break on the show. When we come back, we're tracking all of the action from the world of commodities. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Let's talk about the world of commodities now. We have Manisha joining us. Manisha, once again, we're seeing a big slip in the crude prices.
Oh, yes, 3% in the overnight markets is how the crude oil prices were. And with this, now we are trading at a 3-week lows. We've seen prices head for a weekly decline after 4 straight weeks of gains. So in this week itself, the crude prices are down by 6%. On a monthly basis, they are still up by 9%. The pressure comes in as the street expects that there's going to be more than one U.S. rate hike. There is an 87% probability of a 25 basis point rate hike for the month of May, and a slim possibility that June also could be looking at yet another rate hike. ECB could hike rates by 2 times in this year, and that's bothering all the commodities here right now. And apart from that, the street is also looking at Russia exporting at its highest since 2019 despite the cut. So there is more supplies. Demand is still not stable, and with rate hikes coming in, that could dampen the demand going forward is what's weighing onto the crude oil prices. But not just that, the metal prices also have come under profit-taking. So you have steel trading at a 16-week lows, iron ore prices are at a 3-month lows, copper is trading at a one-week low, and zinc price is now at a 5-month low. So almost everything in metals also trading in the negative.
All right, so some cuts coming through for crude as well as the entire metals pack. Manisha, thanks a lot for bringing us that quick update on what's going on with the commodities. With that, we're going to wind down with the news that most Asian markets are lower right now. The SGX Nifty absolutely flat, just around 10 points in the green. So thanks for tuning into Power Breakfast. We have Bazaar Morning Call coming up for you in 2.